Welcome to another edition of Selling Life and Annuities. I'm Tim Luby. I'm the National Sales Director for Annuities here at Rd Marketing. And with me today is my good friend and colleague, Steve Allison, our internal annuity specialist. And our topic for today is innovation in the current annuity market. So Steve, there's been a lot of innovation. We've talked about this an awful lot, but let's talk about what some of the most notable innovations that we've seen recently in the annuity market and what they are.
Yeah, we've seen a number of them, haven't we? So
Yes.
I think we want to focus more on initially the accumulation side of the annuities that are out there. We've been seeing some changes when it comes to different indexes and how unique they can be for different carriers. Some of them are proprietary to their specific carrier. You have NASDAQ and S&P are typically the common ones, but we're starting to get some extra ones that can be a little bit more aggressive for the client who may want to have potential for more growth.
Right. And so this is an ongoing area of innovation. Index has been around, fixed index annuities has been around for a long time, but the indexes keep changing. They're most of them are proprietary, and the returns that they offer and the affordability, for the insurance company and the ability to credit good rates to the client just keep getting better and better.
Yep. And now they're even starting to offer where you can pay a fee and you get a higher participation rate or a higher cap. So that gives you an extra incentive to, be a little more aggressive if you want to potentially get better rates of return, help with your growth.
Yeah, I love the buy-up rider as they talk about. It's kind of interesting because it does provide a significant opportunity to increase the rate, the cap rate or the par rate, whatever you might have. But it does change the equation a little bit because, if the index doesn't perform and they pay the fee, they might end up having their account value down a little bit. So it can potentially mess with the zero is the hero idea.
Exactly.
Yet for those clients that understand it, it can be a really terrific opportunity to increase the rate. So yeah, we love that as one of the more recent innovations. Yeah. What else are we seeing, if we're sticking with the accumulation side right now as it relates to innovation in the industry?
Yeah, well, typically you have some of the living benefits where, different ways of being able to potentially access your money for certain situations, whether it's a long-term care need, a nursing home need, an employment situation that might pop up. Those are different add-ons that are just built into the contracts where the client can have access to the money, surrender charge free to be able to help them out with it. Another one
great features those living benefits are. And they've been around, but they keep getting sort of tweaked and enhanced and taking small steps to improve the situation, the opportunity for clients in terms of the way they really serve them. Yep. So those are some terrific innovations that have been introduced more recently. We're staying with accumulations still. So any more innovations that are on the top of your mind as it relates to what we're selling today?
Yeah, we got a couple carriers that have these enhanced liquidity riders. That will allow clients to potentially get more than 10% free withdrawal, up to 20% free withdrawal. There's even some carriers that have more of a cumulative roll up on that withdrawal. Some will even give long-term care benefits in addition to it, or a ROP, or return of premium, after a certain time period, where after say 4 years or 5 years, they're able to surrender the policy free of surrender charges because they've been paying a rider fee for the enhanced liquidity rider. So those are some unique situations that might come up that people might like.
Right. Yeah, and it seems to me that as we think about the accumulation opportunities, one of the other opportunities that we see today that might sort of round out the accumulation options are the death benefit provisions. Yes. Annuities are typically rarely had death benefit provisions in them, but we're seeing now, not unlike we see on the income side where there's step-ups, but we now see death benefit options where for a fee you can get a guaranteed step-up and a guaranteed death benefit that may well exceed the account values.
Yeah, and what's nice about that is typically there's not much underwriting involved. So someone may have some conditions that kind of disallow them to be able to get a life insurance policy, but this is an opportunity to where they can enhance that accumulated value to be a much larger death benefit for people.
Yeah, that's a great point. Mm-hmm. And in fact, I think on all the annuity options that we're talking about, if you're talking about straight annuities, none of them are underwritten at all. Am I right? You might have to qualify from an age. They might not be available to an 80-year-old or an 85-year-old. But otherwise, they don't have to answer any health questions, right?
Yeah, that's right. The age typically is the one thing you got to take a look at.
Right, that's good. So that's a pretty comprehensive list of innovations that we talk about on the accumulation side. Many of those on the fixed indexed annuities, not as many on the MIGA side. But another area that in general we've seen a lot of innovation on is on the income side. Even and fundamentally just the fact that we've got these withdrawal riders that are available today, that were not that highly available many years ago. It used to be that annuitization was the primary way that you got a guaranteed income out of annuities, and now, the withdrawal benefit riders that are available today, while they've been around for a little while, are still an extremely innovative introduction to the market, and they've been broadly embraced now. But let's talk about those and some of the add-on innovations that we've seen since those have been introduced.
Yeah, since they've been introduced, there's so many different ways that these carriers are going about figuring out how much income they can give to people and how they can increase that bucket of money that the client has. So you have roll-up rates, which is a guaranteed interest rate to the income base that can increase the amount that they have. You have different payout rates, so different carriers will have different payout rates for a single or joint, and those continue to change and innovate. You have also bonuses that may come into play as well to help kind of recover maybe from a surrender charge and whatnot.
Yeah, and that's interesting. We look at all the different income out there, and many of them have different bonuses, different step-up rates, different payout rates. And what we often sort of try to close in on is who's ultimately guaranteeing them the highest income.
Yep.
But the one company may have no bonus at all, and another company might have a huge bonus. But really, what it comes down to is who's guaranteeing the highest income for what they're trying to do when they're trying to turn income on.
Yep. What's the number?
Yeah. So it's interesting because there can be players with no bonus at all versus bonuses as high as over 50%, and they all have different ways of getting to a very high guaranteed income for people.
Yep.
So just the way that there's different ways to go about it is an innovation in and of itself. What else are we seeing on the income side?
Well, a lot of them have. Not all carriers, but there are a number of carriers that have like an enhanced long-term care multiplier or a doubler, where you're able to access more cash and more money in an event of a long-term care situation. Sometimes only needing 2 of 6 ADLs, or sometimes needing confinement. But giving the client an ability to have extra cash on hand to pay for that need has been something that a number of carriers have picked up on.
Yeah, truly one of the newer innovations that's out there and really outstanding, quite a meaningful differentiator. All things equal, if you've got a guaranteed income from a few different carriers, but one of them is offering that enhanced benefit that might increase the income for a couple, let's say by, 150% or even 200% in the event that, in some cases, they might just be either one of the people are just missing 2 of their 6 activities of daily living. In some cases, they have to be confined. But those are really outstanding benefits that can make a big difference and really can be quite a differentiator. So really some great options that we talked about on the income side. There are some other innovations in the annuity market. I'm thinking about many of the long-term care options that are out there. There's some interesting things. We talked about some long-term care add-ons on the accumulation side as well as on the income side. But there are some also that are really sort of more standalone options as it relates to addressing a long-term care situation for people. So what are some of those that we're seeing?
Yeah, we got a couple carriers that it's a fixed index annuity that is specifically built to take care of a long-term care need. And typically there is some underwriting, but it's not as stringent as a typical standard long-term care policy, or even those policies that you see that are kind of built from a life insurance chassis. So this is an annuity that has sometimes only 5 questions or even 10 questions, and if you're able to answer no to some of them or all of them, you're able to get 2 or 3 times your money, and it's strictly just for long-term care. So it's an easier way for somebody to address that need without having to go fully underwritten.
Right. Yeah. So some terrific options that are short of the fully underwritten options that are available in the market on the life insurance side or even on the long-term care side. The last thing I think comes to mind to me as it relates to innovation is one that's a little less known or appreciated, if you will, but it's on the new business and on the processing side of things, right? Yeah. So, one of the things that comes to mind to me is that most all carriers now do just-in-time appointments, right? Yeah. So let's talk about that process a little bit.
Yeah, so that's really handy for agents who happen to come across a client and they want to move quickly into getting this app written. And but they're not contracted with a specific carrier. A lot of carriers nowadays allow for just-in-time, meaning you can submit your contracting paperwork and an application the same day. We get you the product training. You can take care of all three things all in the same day, and there's no hiccups. There's no bumps in the road. There's no waiting for stuff. You can get it all up to the carrier right away. And then to piggyback on that, a lot of carriers nowadays are almost requesting or even requiring you to do an e-application. They don't even want to do paper apps anymore. So that's another innovation to make sure that to reduce the NIGOs, to increase the speed of how quickly they can get policies issued.
Right. Yeah. No. Great points. We love the just-in-time appointment process on the side. And again, most carriers won't appoint you till you actually have an app to write.
Yeah.
But as a consequence of that, they've gotten very efficient at being able to do it really quickly.
Yep.
And then, of course, you mentioned NIGO, which is not in good order. That's one of the biggest things that plagues agents. They submit an application and it's not in good order, and it delays the case. It delays the money getting transferred. It delays the client getting their policy delivered. It delays the agent getting paid. So there's a lot of reasons why NIGO is critically important to agents. So with that, we're kind of running out of time. We kind of wound things down. If you're interested in some of the ideas that we've talked about and want to discuss some of the innovations we've highlighted here today, please reach out to us. You can reach me at timl@gordonmarketing.com or at my direct number, 330-283-6140. You can reach Steve. Want to give your contact information?
Sure. My email is sallison@gordonmarketing.com, and my extension is 140.
Great, thank you. So thank you for joining us. One last thing I guess we'd like to talk about before we sign off is if you do us a favor and like the video that you watched today, comment, share if you would, please. And then you would also, if you could also subscribe to the channel, and please click the notification bell that you see below so that you'll be notified anytime we come out with new selling life and annuity content. With that, thank you so much for your time and attention. Thank you, Steve, for the conversation today, and happy selling.